The modern marketplace moves fast, real fast. So if you're going to be a scalper, then you need a strategy that allows you to act quickly. That's where the 5-8-13 EMA Scalping Strategy comes into play. It's easy to learn and it's built for speed. Now in this video, we're going to show you how to trade the 5-8-13 EMA Scalping Strategy in under 5 minutes. Okay, let's do it.
The 5-8-13 EMA strategy is a triple moving average strategy. So before we begin, we must add our EMAs to our charting platform. Here's how to do that on TradingView and MT5. For TradingView, very simple. Just go up to indicators, cursor down to moving average, and go ahead and give exponential a click, and you're going to click that 3 times. Now, that's going to bring up each one of your moving averages. You just go to settings, you dial in your length, which is 5-8-13. Your style, you need to make them different colors. I go with red on the 5, blue on the 8, and purple on the 13, and that's going to give you a good look at your 5-8-13. That's how we get started there. MT5 is just a little bit more involved. You're going to go up here to insert, click insert, go to indicators, and then right down to trend. You're going to go ahead and click on moving average, dial in your periodicity, and then also change the colors, and you should be in pretty good shape. So that's what it looks like. Let's go ahead and get started trading the 5-8-13 scalping strategy. Okay, if you want to begin trading this strategy immediately, check out switchmarkets.com. You need tight spreads and rock bottom commissions to scalp successfully. Switch can give you both of those assets and get you up and running in no time. Open an account in a flash and begin scalping your favorite markets immediately. Check it out, switchmarkets.com.
All right, the best thing about this strategy is that it is easy. There are only 3 rules to remember. Number 1, you wait for the 5 EMA to cross above or below the 8 EMA. Number 2, you wait for a price bar to close above or below all 3 EMAs. When that happens, you buy it or sell it. That's it.
Okay, here's an example of a 5-8-13 trade that we're going to work on the gold market, 30-minute time frame, looking at the short side. Now, there's only 3 rules. The 5 is going to cross under the 8 EMA. We're looking for a price bar that closes beneath all 3 EMAs, and then we're going to go ahead and sell this market. A buy would be exactly the opposite. You'd be waiting for the 5 to cross over and price to get established above all 3 moving averages. Okay, let's go ahead and move forward in time and see what we have. And right there's going to be our break. So we broke negative. You've got the 5, which is our red moving average, crosses over the 8, and price is established beneath all 3. So what we're going to look to do is you're going to look to short the market. Your entry would have been right on that bar close. Now the question is, where do I put my stop loss? You have a couple of options. Number 1, you can put it right above our signal bar, which would have been our big negative break and our close beneath all 3 moving averages, or you could put it right above your swing high, the most previous swing high. I recommend swing highs, but you don't have to do it that way. And the last thing you would do is look for your profit target. What do you want to do with that? Well, risk versus reward ratios, you could make it a static risk versus reward, 1 to 2, 1 to 3, 1 to 4, whatever you want. Or you could build something maybe that's according to market structure. You could say, well, I kind of want to shoot for this order block down here as being my profit target. And you can go ahead and put it on, and let's see exactly what happened here. You know, you'll notice that we get in on a pretty good negative move, Now, the last way that you could manage this trade, and it's one that a lot of folks really believe in, they like to just work the crossovers according to what they do. And as you can see right there, that would have been your out. So if you just work a crossover strategy according to when the 5 crosses under, then your stop out point would have been when the 5 crosses back up over the 8 and price gets established back above all 3 moving averages. Guys, that is it. That's about as simple of a trading strategy as you're ever going to find. This strategy works fairly well. You want to trade it when the market is most active. You're looking at the London session, you're looking at the US session, and that London-New York overlap. That can get you up and running with something as small as a 30-minute chart, preferably a 4-hour chart. We'll talk more about that in a minute, but that's how you trade it. 3 easy rules, ABC.
The best strategies are simple, and the 5-8-13 EMA strategy is as easy as it gets. Now to optimize your odds of success, apply this strategy when the markets are liquid and active. A great place to start is with a 30-minute or 4-hour chart for Forex pairs during the London and New York sessions. Now here's one last tip. When the market flattens out, be conservative with your risk. Choppy conditions are brutal on crossover strategies. With the 5-8-13, make sure you are trading a mover and a shaker. All right, that's it. Like, subscribe, and we'll catch you on the next one.